Here we go. It's the final call of 2025, and the US Federal Reserve is just hours away from a decision that could send some serious shockwaves through your portfolio. You can feel it, right? Global markets are pretty much holding their breath, and right now we're going to break down exactly what's on the line.
So what's the real deal here? Let's dive in and really unpack what the market is expecting. We'll get into the nitty-gritty of the data that's driving this whole thing, and most importantly, we'll explore what it all could mean for major assets like gold, silver, and of course, the US dollar.
This is the magic number everyone is watching, negative 25 basis points. So what does that even mean? Well, a basis point is just a fancy way of saying 1/1 of a percentage point. So we're talking about a 0.25% cut. And if this actually happens, it'll be the third cut this year, bringing the grand total reduction to 75 basis points. But, this decision is anything but simple. The Fed is basically caught in a classic economic tug-of-war. They're trying to juggle two huge opposing forces, and it's a real balancing act. And this, right here, just perfectly lays out that conflict. On one side, you've got the economy slowing down, the labor market showing some weakness, and all of that is basically screaming, hey, cut rates to keep things growing. But on the other side, you have these stubborn inflation fears that are whispering a warning, saying, whoa, be careful. Don't ease up too soon and let prices get out of control. And that quote, that's straight out of the Jerome Powell playbook. It captures his super cautious, we're going to look at all the data stance we've seen in recent meetings. He's literally walking a tightrope, and it's kept all the traders on the edge of their seats, not wanting to make any big aggressive bets. But here's the crazy part. Right after the last meeting, the chances of a December cut had actually dropped a lot. So what on earth happened to swing the pendulum back so dramatically?
I mean, just look at this timeline. You can see that reversal plain as day. This wasn't some slow change in thinking. It was a huge, sharp pivot, and it was all because of some crucial new economic data that basically flipped the entire script in just a few weeks. So you gotta understand, this wasn't just about one bad report. No, this was more like a perfect storm of factors. The weaker payroll numbers, yeah, that was the big headline, but you also had whispers in the political world about a more dovish Fed governor, real-world signs that companies were slowing down hiring, especially for younger workers, and to top it all off, the Fed's favorite inflation number was finally getting closer to where they want it. All of that just piled up and made a rate cut feel like the most likely outcome.
Okay, so this brings us to the main event, the moment we've all been waiting for. We know what the market thinks is going to happen, but how could tonight actually unfold? Let's break down the 4 main ways this whole thing could go.
Okay, before we dive into those scenarios, let's just quickly get on the same page with a key term you're going to hear a ton, dovish. It's simple, really. It just means the Fed is leaning towards policies that help the economy grow, like cutting interest rates. The opposite is hawkish, which means they're more worried about fighting inflation, even if it slows things down.
Okay, check out this matrix. It really lays out all the possibilities. The absolute dream scenario for anyone holding gold and silver is right there at the top. A rate cut plus a dovish signal that more cuts could be coming. That could send precious metals flying and the dollar tumbling. But then, look at that bottom row. A surprise no cut would be a total shock to the system, causing a huge, sharp reversal across the board. The two in the middle just show how the Fed's tone, cautious or hawkish, can lead to more mixed or choppy results.
And that's the key thing to remember, right? The actual rate decision, that's only half the story. The real fireworks could be in the press conference afterward. The market is going to be hanging on every single word, listening for any little hint of a policy pause for 2026 versus being open to further cuts. That language is what will really set the tone for the next few months.
So you're probably thinking, okay, this is a lot of potential chaos. What am I supposed to do with my money? That's a great question. Here's a simple 3-part playbook to help you navigate all the noise.
Look, the big takeaway here is all about discipline. This is really not the time to be making huge, speculative bets. Stick to your long-term plan. Don't get greedy or tempted by using too much leverage. And maybe most important of all, be patient. Let the dust settle after the announcement and wait for a clear trend to show itself before you make any big moves.
And there you have it, the whole picture. The decision, the all-important economic projections, they're all about to drop. And they're going to send ripples across every single asset class. We've walked through the scenarios and the strategy. Now the stage is set for the Fed's final call of 2025. What happens next is anyone's guess, but it's for sure going to define the market for months to come.